Welcome back, Middle Age Grind. And I want to do a follow-up to the life insurance video that I just put out there. Um, there's a lot of different opinions about it, life insurance in general. I want to go over some other things too. I love Dave Ramsey. He's fantastic. You want to follow his principles, you're going to be just fine. He hates permanent insurance products, a whole life. He believes you should just have term and save your money, and because whole life's a bad investment kind of thing. I'll say this: life insurance should never be treated as an investment. Okay, even though it builds cash value, it's not an investment, guys. It is life insurance. I will say though, I purchased a policy, a 15 pay policy when I was 25, paid up with 40. I'm 42 now. It was a $25,000 policy, and it grows. The death benefit grows a little bit too. I feel good about that, guys. I don't know about you, but hopefully one day I do have a nice portfolio. I've shared other videos where I've shared what we're doing for retirement. But, having that paid up policy going forward, and, I kind of just feel good about it. It's just a part of my plan. And I think everyone, it's their journey, right? Not has to be this cookie cutter thing. Yeah, do you need a lot of term insurance when you're a younger guy or gal, and you're looking to protect your income for your family? Yes, you do. I think you do. And as you get older and you pay off your debts and get assets, do you need less? Certainly. But I'm going to give you an example. At age 65, I have a couple $1,000,000 in a portfolio. All my stuff's paid for. My kid's out of college. I think that's great. Well, having a $40,000 death benefit policy paid up at that time, with the growth of that death benefit, am I going to regret that? I don't think so. And that's why, does everybody have a big portfolio at age 65 or age 67? No, they don't. So there's reasons to have life insurance that's going to be unique to everybody. I want to give you some benefits of having your own personal life insurance. One is portability. What do I mean by that? Most people say, I have it at work, and that's great. Whatever you can usually get at work, I usually recommend people to get, because it's usually cheaper, and a lot of times you don't have to prove insurability, so you can be in bad health, that kind of thing, and you can still get it. But as you know, most people now, I think they have 7, 8 jobs in their lifetimes. As you keep switching jobs over and over, your coverage usually does not follow you. It usually stays at that employer, and it kind of, when you terminate with them, those benefits cease. As you get older, we tend not to get healthier. It gets more expensive. You might have some issues. When you buy a policy from a company, it stays with you no matter where you're working, that kind of thing. That's kind of the portability aspect. The next part of it is insurability. I like going over this. I have policies on my kids too. I've did some 15 pays on them. And, there again, Ramsey would say, that's terrible. Why are you buying it on the kids? We at State Farm have an option called the Guaranteed Insurability Option. And it gives those kids, starting at age 18, I believe, or 19, 7 different opportunities to purchase additional life insurance throughout their lives, regardless of their health. That's pretty big. So if a kid has some health issues, juvenile diabetes, that they find out later, if you get those policies when they're young, you're giving them those options. So if they have a $25,000 policy, they'll have a $25,000 option 7 more times in their lives. They don't have to take it, but it's there. And I think that's just something that's pretty neat that most people don't know about, that could be a benefit for having it on your children. It's kind of less about, think about, something happened to them when they're young, even though it can. this is something, the gift you kind of given them in their future, and they can utilize. Another thing, proceeds, tax free generally. They avoid probate. We paid a lot of claims since I've been an agent. People get the money rather quickly, and they can go do what they got to do and take care of their final. Talk about the beneficiaries in this thing. Like I say, life insurance should be treated as life insurance. It's not an investment, even though the permanent policies do have some cash, loans available to you when you're alive. I think it's smart to tend to stay away from that. Treat that as maybe more of emergency type funds, and let those things grow and those death benefits grow. And I really like those 10 pay, 15, 20, and even the 65 options. Different companies can have different things. That way you're not having a bill in perpetuity the rest of your life. So if you have any questions, I know some people have emailed me. I hope that's covered a lot of the stuff out there. And I'll be glad to have it. Put them in the comments. And I'll see you next time on the Middle Age Grind.